Hey, welcome to the Explainer. You ever look at your bank statement and just kind of shake your head? That protein powder, your new running shoes, even your gym membership, it all feels like it's getting more expensive by the day. Well, you're not imagining it. And the reason why might actually surprise you. It's a story that doesn't start in the supplement aisle, it starts at the oil rig.
It's a super frustrating question, right? You're doing all the right things, you're committed to your health, you're putting in the work, but your wallet is feeling a serious burn, and it's definitely not from the workout. It seems like every single time you go to restock your gear, the total of the checkout is just a little bit higher than you remember. So what is going on?
In this explainer, we're going to connect all the dots. We're going to follow the money and uncover this invisible economic engine that directly links the global price of energy to the cost of your fitness routine. Think of it as a journey. We're starting at the gas pump and going all the way to the dumbbell rack. And I promise, by the end, you'll see your budget in a completely new way. Okay, first up, let's bring this right down to earth. Our own personal finances. This isn't some abstract economic theory. This is a real-world workout for your wallet.
You know, this is such a timeless piece of wisdom. It really highlights a fundamental pressure we all deal with. It's human nature, right? Our expenses just naturally seem to expand to fill whatever income we have. But what happens when those necessary expenses, like the stuff we buy to stay healthy, start rising all on their own, pushed up by forces totally outside our control? Well, that pressure gets way more intense. And suddenly our budget feels incredibly tight, even if our pay hasn't changed a bit.
So where are these rising costs actually coming from? Let's follow the trail. It all starts with the price of power itself. Okay, the key economic idea we're talking about here is called cost-push inflation. And for a second, just forget everything you've heard about consumer demand. This is all about the supply side. It happens when a really important ingredient, something essential for making and delivering products, gets more expensive. This forces producers to, well, push those higher costs down the line until it eventually lands right on us, the consumer.
And what's one of the most fundamental ingredients in our entire global economy? You guessed it, oil. We're not just talking about gas for our cars. Oil is used to make plastics. I mean, think about your supplement tubs, your shaker bottles, the soles of your sneakers. And maybe most importantly, it fuels the trucks, the ships, and the planes that move almost every single product you buy from point A to point B.
So here's exactly how that chain reaction works. First, something happens out there in the world, maybe a conflict, maybe a supply problem, and boom, oil prices jump. Instantly, it gets more expensive to move everything. So the company that makes your pre-workout now has to pay more to get the raw ingredients shipped to their factory. Then they have to pay even more to ship the finished tubs to a warehouse and then again to the store. Every single step adds another layer of cost. By the time you pick it up, all those little increases are baked right into that one higher price tag.
But wait, the impact of energy goes way beyond just transportation. Think about your gym for a second. It's this huge space, right? It needs to be lit up, heated in the winter, cooled in the summer. It's got rows and rows of treadmills, ellipticals, all these machines just constantly pulling electricity. So when energy prices go up, the gym's utility bills go through the roof. And the same thing is true for the factories making all your equipment. These are massive business costs, and a lot of the time, the only way to cover them is by increasing membership fees or the price of their products.
And as you can see here, this is a year-round problem. In the summer, the electric bills are soaring because they're running the air conditioning nonstop. Then in the winter, it's the heating bill that spikes from using all that natural gas. For a business like a gym, there's just no escape. Energy is this constant, huge, and fluctuating expense that ultimately gets factored right into the price you pay for your monthly membership.
All right, so now that we get the direct cause, let's zoom out a little and see how all this is measured in the wider economy. Because believe it or not, how we talk about inflation really matters.
So, as we've seen, there are really two main engines that drive inflation. We've been focused on cost push, which is what happens when supply drops, like during an oil shortage, and that pushes prices up. The other side of that coin is demand pull. This is what you might hear about when people talk about things like stimulus checks or an overheating economy. Basically, there's just too much money chasing the same amount of stuff, which pulls prices higher. And while both can happen at once, that cost push from energy is just such a powerful, foundational force.
And here is the big aha moment. See, the most common way we measure inflation is with something called the Consumer Price Index, or the CPI. It's supposed to show us our real cost of living. But, and this is wild, the most common version they report, what they call core inflation, deliberately leaves out food and energy prices. Why? Because they're considered too volatile.
This just leads to a massive question, doesn't it? If we've just laid out how the price of energy ripples through the cost of nearly every single thing we buy, why on earth would it be excluded from the main inflation number? It creates this huge disconnect between the official stats and what we all experience in the real world when we see our grocery bill, our gas bill, and yeah, our fitness expenses just keep going up.
You know, this gap between the official numbers and our daily lives, it really points to a much bigger issue, a huge lack of financial education for most of us. For most of us, these complicated economic forces feel really confusing, and it's because we were never really taught how to make sense of them. The subject of money, of investing, of inflation, it's just not a standard part of most school programs. Our financial education usually comes from our families, which means if our parents weren't financial experts, we're pretty much starting from square one.
And this is not just a local problem, not at all. Let's take a country like Sweden, famous for its incredible education system. They teach all sorts of practical skills like cooking and handiwork, but personal finance and investing are just missing. We're taught how to earn a paycheck, but not how to make that paycheck actually work for us.
So what do we do about all this? Well, we take that same discipline, that same focus, and that same long-term mindset that we already use in the gym, and we apply it to building our financial muscle.
This right here is the key insight. You already have the mindset you need to be financially successful. You know that getting fit doesn't just happen. It's the result of hundreds of consistent, positive choices made over a long time. Well, guess what? Financial health is exactly the same. There are no get-rich-quick schemes, just like there are no magic pills for fitness.
Let's just break it down side by side. In the gym, what's the goal? Health, strength, right? And the method is consistent workouts and a good diet. With your finances, the goal is wealth and security, and the method is consistent budgeting and investing. The mindset is literally identical. It's a long-term game that rewards patience and discipline, not shortcuts.
So here is your actionable workout plan for your finances. Number 1, manage what you measure. You track your reps and sets in the gym, so track your money with a budget. 2, focus on your assets. Try to buy things that put money into your pocket, not just things that take it out. 3, develop your credit score. A good score is like a superpower. It makes borrowing money so much cheaper. 4, invest for growth, especially when inflation is high. And finally, number 5, increase your knowledge. Make your financial education an ongoing priority, which is exactly what you're doing right now by watching this.
I'll just leave you with this one last thought. You walked into the gym for the first time knowing it was going to be a long journey. You accepted that progress would be gradual, that it would be built on consistency and effort. So just apply that same powerful, patient mindset to your money. Start today, stay consistent, and you can build a financial future that's every bit as strong and healthy as the body you're working so hard on.